Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. Hope all is well today with you. We're financial advisors here at Jazz Wealth. We do long-term investing for you. We plan with you. We teach you, and coming soon, day to day, we'll even trade with you if you want, show you how all that works, and you can see if we're really any that good. Anyways, what we're going to talk about today is something maybe a little basic. Bear with me here. Trailing stops. How many of you use trailing stops? Maybe you'll let me know in the comments below. Do you? Right? Some of us have jobs, right? We got things to do. You might have to use a trailing stop. Well, I got this question the other day, and I was sort of shocked by this, actually. A client said, when should I get out of a particular stock? It was Alibaba, to be honest with you. And I said, well, what do you mean, when should you get out? Stock's going down, right? Do you want to buy it? Or I didn't understand the question. And so it occurred to me that this person was really just hanging on for dear life, had no idea what they were going to do. They were playing defense rather than offense. And that general rule of thumb in the market is as soon as you start playing defense, you've already lost, right? So you got to play offense here. Now, if you're one of our clients, what I want you to do is I want you to actually go into the dojo real quick, and I just want you to go in there and search trading, right? So over here, we just search trading, and here's the classes that we've put together. More particularly, trading plans, how to build a trading plan. It's very important that you actually have a plan before you do something, right? So this would involve trailing stops. At some point, if you buy a stock, and I always say it this way, if you buy a stock and you make a profit, you did no work. Nothing happened. You got lucky, you had a good assumption, and you were correct. There was no real strategy involved with that. Buying, making a profit, just happens sometimes, right? That's the way it goes. But managing the trade or the investment or whatever you're doing, that's the strategy. That's where we want the nuts and bolts. What to do if you buy something and it goes down first, then starts going up. What do you do if you buy something and it goes up really fast and in a couple days or whatever? You weren't expecting that. Well, we're going to take a look at Alibaba here today because the client of ours had the position during this nice run. Great run. It was exciting. They obviously didn't have a profit target. Step one is you want to have a profit target. Now, a lot of people, what they'll do is they'll say, I'm buying a stock. I will admit defeat if I have a loss at some point. They define that point. And then they say, if all goes well and I don't really have to try, I would like to sell up here for some target, whatever it may be. And a lot of people will sell part of their position and then let the rest ride and see what they can get out of it. And to do that, letting it ride, you may use a trailing stop. And I want to kind of explain how this works. So let's say, for example, you use a dollar trailing stop. Now, you could do this in a number of ways. You could do a dollar trailing stop, meaning it will follow so many dollars behind. You could do a percentage trailing stop. Same thing, just follows by percentage away from the current price. You could do combinations, dollar and percentage. You could even do indicator-related trailing stops, meaning if there's a, let's say you follow stochastics. I'm just trying to think of one. Or moving averages is even better. So let's say you follow moving averages and you go, I would like my trailing stop to be just under the moving average by whatever you decide. And so it will always be there. If the stock's moving higher and the moving average starts going higher, so will your trailing stop. So there's all kinds of combinations you can do. To make this simple today, I'm just going to use a dollar trailing stop. So let's say you own the stock, luckily, at $200. Your price target was $300. Right? Awesome. Great trade. So the stock's moving up, moving up, moving up, moving up. At some point, where does it get? Doesn't get to 300 right here. Not quite. Pulls back, and you would sit through that. No problem. The next rally gets up to 300, and you take some portion of your position off. Congratulations, you have a profit. Now, you at that point, with whatever you're going to leave, may consider a trailing stop, where you would say, if it falls $5, for just a random number, if it falls $5, I would like to get out. Well, at the moment you place that order, that trailing stop order, it's going to say, where is the current price of the stock? It's at $300. That means if we fall to $295, I'm going to get out. Now, what happens if it goes to $300 and let's just say $5 before it falls? Well, the clock is ticking. It goes, all right, if you're at 301, we're going to get out at 296. If you're at 302, we're going to get out at 297, and so on and so on. And so the trailing stop locks itself. It can only go up. It cannot go back down. So in this case, let's say we got to $300. We say, if it falls $5, I'd like to get out. It went up like another dollar, right? Oh, no, it went up. Oh, here we go. It went up to 308. We'll call it 309. So now the trailing stop is at 304. Right? It inched its way up. It'll do it automatically. So every time the stock ticks up a penny, so will your trailing stop, and so on and so on. So at some point it went up to $309, falls to 304. During this like 2-day sort of decline, trailing stop stays at 304. It looks at the market and goes, the new stock price is 306. We were at 309, stay at 304. Now we're at 305. Keep the trailing stop at 304. Now we're at 304.50, 304 and a quarter, 304, bam, market order triggers and goes into the market. That would be a trailing stop. Now the key point to this is that when you place a trailing stop order, you're entering a limit amount. You're saying, I want to limit the trailing stop to $5. If it falls $5, I want out. That's not technically an order. So you think, well, how does the order always replace? That's just an order or a request being held on the platform. It's not sent to the market. Nobody can see it. Nobody knows what you're doing. It's held on your platform. At the point that it hits that number, the platform says, place an order right now to get out at 305. What type of order is that? It's a market order. Goes through that way every single time. So you may not get out at 305. If it's falling fast, you may get out at 304.90 or whatever the number may be. So the order only triggers and is shown to the market at the moment that it hits your trailing stop number. A lot of people get that question or get that wrong. There's this old misconception that market makers and all these other shady market participants are watching that order and they know how to go down there and get that order. Well, that just proves those people aren't very familiar with how it works, because no one can actually see that order until it is placed and triggers in the market. So there you go. Like I said, you could do percentages. You could say if it falls 5, 10%, I'll do the same thing. If it falls under the moving average, I want out. You could specify the moving average. If it's stochastics, you could say I want out, if the stochastics cross over or whatever it may be. But you got to have something, right? There has to be a moment where you call it quits, even if it's not at the very top. You cannot sit there and ride this all the way back down and feel the pain of having a $100 profit, even on just one share, and then losing all of it. So make sure you're working with trailing stops there. And if you're not familiar with how to build a trading plan and you're one of our clients, of course, we have those classes there for you. You can check that out. And if someone will comment and remind me, I will actually mark those to go public in the research site as well. So if you're a research member, you can check that out. Otherwise, I wish you a great rest of your day. Thanks for participating here with me today. We'll see you later on the Closing Beat, live at 5 o'clock Eastern Time. Enjoy.